G'day Internet, Max Wright here, and a little bit of an update. We have a massive week coming up and a little bit after that actually. So we've got the Fed meeting this week, a whole bunch of companies are releasing their earnings this week, and then also early next week, of course, we have the US midterm elections. Now, all of these things are important, but I think probably the election is the most important thing. I think it's going to mark a pivot point, and I'll tell you why, not because of the result, but more because of the strategy. I think what the Biden government has been doing is they've been releasing huge amounts of the petroleum reserves, U.S. petroleum reserves, to suppress energy prices. But as soon as that midterm election is over, what they're going to they're not going to have to do that anymore, right? It's just a political ploy to keep down inflation to try and get as many of their people elected in the next thing. It's not in the country's best interest in any way, shape, or form to reduce our reserves like that. At some point, we're going to have to buy those reserves back. And so I think we're going to see, this very, very harsh inflationary climate continue for quite a long time. It's hurting people absolutely everywhere. It's hurting people in the US, but really it's hurting people everywhere else in the world even more. Europe is in just all kinds of trouble with gigantic energy prices to the point where their manufacturing industry has just become completely uncompetitive. And so their prices will absolutely soar, and it's just going to be a long, hard winter. So, moving on into November, the cold really starts to hit in Europe, just gets worse from here on in. And so I think with the benefit of hindsight, we're going to look back at this kind of next few weeks. I think the Fed's going to put interest rates up again. We see as we move into winter now, Europe's going to get a very, very tough situation. And of course, the midterms are going to happen. So all of a sudden, all the political trickery matters less, and you're going to see some pretty nasty inflation. Now, that inflation, just the net result, that's the stated goal. Well, the stated goal of the interest rates is to make people so poor that they can't afford to buy things, which pushes up the price of inflation. But this is a supply side push inflation. So it's worth just taking a little bit of time to think about this here. Great economist Milton Friedman, he said something. He said, inflation is always a monetary event. And I understand why he said that. He said that to push back against a whole bunch of ridiculous narratives about what causes inflation by the Keynesians who came up with some very, very stupid ideas. And so he pushed back against that. But he was, in my opinion, actually wrong. There is something else. Inflation is very simply, it's a ratio between the quantity of goods produced and the amount of money produced. That is the ratio. Now, he said this in a time where, economic growth and the amount of goods that were produced kind of steadily rose, right? And so it was kind of a constant in the equation. It was the money supply, that what the government did to the money supply, that was the variable. And so the statement was true, but I think in this environment it's a little bit not quite true, because the COVID lockdown and the absolute destruction of physical product, goods and services being created, the supply side chain issues that manifested after that, and then you go into the Ukraine-Russia war, where the US and other countries are seizing Russian assets, and you see the collapse of globalization. And we move very quickly into a world of deglobalization, where we are no longer sourcing things from the most efficient locations, but actually we're sourcing things from goods, services, raw materials. We're sourcing them, and every country in the world is doing this now. They're sourcing them from places that are the most reliable, not the most efficient at producing them, but the most reliable. You add up all those inefficiencies, and you get a very big shock to one side of that equation, which is usually very, very stable, which is GDP. It is product creation. And so that is why we are going to have pretty high inflation for quite a long time. That high inflation in and of itself makes people very, very poor. And right now, we've kind of been shielded from it because there's always a lag from increasing interest rates and inflation and all those things. There's a lag to all of those things. Plus, people had a decent amount of savings. There was a pretty decent amount of savings there that people could tap into, but those savings are getting crushed pretty hard. And pretty soon people are going to run out of those savings, and they're going to have to pull their head in. I think that's an Australian phrase. That means reduce their spending, right? They're just going to have to just be a little bit tighter on the wallet. They're going to have to spend less. You're going to see company earnings go down. You're going to see layoffs. You're going to see unemployment spike, which, by the way, the unemployment spike is another, for all intents and purposes, if you read through it, it's the stated purpose of the Fed's increase, interest rate increase, right? They want to make you poor. How do they make you poor? They make you unemployed. right? They reduce the amount of wage inflation. See, right now here in the West, we have a wage shortage, right? We have a labor shortage, right? And so where the labor shortage means increased prices in wages, which means the inflationary effects don't hurt as much, but they want the inflationary effects to hurt as much, and it just hurts very unequally. If you're unemployed, the inflationary thing hurts a lot. If you have a job and your wages are going up, it's a lot less severe, the inflation. Although, of course, the inflation is a tax on your previously saved wealth, right? But you add all of those things here, and I think we will look back at kind of this week. I'm not saying that the day after the election the market crashes. I'm not saying that, but I'm just saying that if we'll, with the benefit of hindsight, we'll look back and we'll say that these next couple of weeks is going to be a real turning point, inflection point in all the charts, and you'll see things I think start to look really, really scary. People will get scared. People will get nervous, and all the ramifications of that will take place, including falling asset prices. So time will tell to see if that theory is correct, but I wanted to give you that update. It's been a couple of weeks, but now I've got something else very important to share with you. And this is actually a challenge. It's a challenge for you. It was a challenge that was given to me about 2 decades ago by one of my mentors. And it's a challenge that I have for you. So here is that challenge. I grew up in Australia. In Australia, the financial newspaper is called the Australian Financial Review. It's the same as the Wall Street Journal, or if you're in England, the Financial Times. It's that kind of a publication, right? And I was given a challenge by my mentor. And he said, read at least 3 articles from this every single day. And I was like, I started it. I didn't like it. I couldn't understand it. It was a giant pain in the ass. And it was really confusing. I didn't understand all the concepts, and there's lingo in there and all of those things. He said, keep reading, keep reading. Well, I did keep reading. And it didn't take very long, actually, just weeks or months. And all of a sudden, I was very, very competent. I can understand the articles at least. I understand the lingo. I learned the language. And I understand the language of finance. I understand the lingo. I understand what they mean. I started to understand how things interact. And while mastery took many more years than that, the actual base understanding came very, very quickly. And all of that led into a very, very important component of my life, which is in 2012, when the price of Bitcoin was just $12. When Bitcoin was explained to me, all of a sudden, even though I have no formal training in economics, all of a sudden I understood that people over the next few years and decades were going to need this asset like a thirsty man needs water. And I knew it was a great place to park my money. And it's made me very, very wealthy. And I attribute, all of that to a passion that was brought up for economics, but it came from, it came from a lot of things. I did have it before then, to be fair, but that the without a formal training, because remember there was no internet back then. I'm showing my age here, but there was no YouTube, and there was no place to learn. You just had to read the Financial Review. Now you have an infinitely number of resources better. This channel is one. I hope it's why I do this. But what I've done, I've talked about in a few other videos, is I've created another channel, which is not me, but I consume hours upon hours of content, economic content, every single day. And I've built a team now so that I just say, hey, this video, I just watched this video. These are the components that are very important. Go ahead and create these videos. And a whole team goes to work and get these videos. And they're releasing these videos. They're just little 10, 12-minute highlight reels of the most essential investing tips that happen in that day from the world's best fund managers and hedge funds and demographic analyst guys and doomsayers and the eternal bulls, all of it. It's both sides of the equation. And I have a challenge for you, the same challenge that my mentor gave me. And I don't know if it'll pay off in weeks or months or years, but here's what the challenge is for you. I would really, really like you to go and check out this new channel and just commit to yourself. It's 10 minutes a day. I usually watch it on faster speed, which doesn't help with the YouTube algorithm because it means your watch time is less, and YouTube algorithm really likes that. But I always watch it, 1.5 speed, 1.75 speed, something like that. We're talking about just a handful of minutes per day. And if you commit to this, just getting these tips, all of a sudden, in a very, very short amount of time, the language, the lingo, the concepts, the interactions, the way the two different, the way the bulls talk, the way the bears talk, the way they have confirmation bias, all of these things become very, very apparent in a very, very short amount of time. And I don't know when it will pay off, days, weeks, months, or years, but I believe it will pay off big time to your wealth. I believe you will understand where the puck is going. You will be able to be the Wayne Gretzky of the investment world. You can skate to where the puck is like I was able to do with Bitcoin in 2012. and an incredible amount of wealth will flow to you from that. That is my belief. I obviously can't guarantee that. Results not typical, all the good things. But my challenge to you is the same challenge that my mentor gave to me. I've got it. There's a great video they just released the other day. It's from Peter Zehan. If you don't know Peter Zehan, he is a guy who's like studying of demographics or just a deep researcher of macro stuff. And it's just, the theory, everyone's talking about China's going to take over the world, China's going to take over the world. Well, he's got a very important thesis and backs it up with a lot of evidence for why China's on the verge of absolute collapse. And it just totally changes the playing field. Like, if you understand that this might happen, it's an amazing video. I think it's really cool. I highly recommend you go and do that. What I'll do is I'll put a link in the description, which will be that episode, but then it'll just be a playlist. So we'll just go through the first, I think that's episode 11. So the first 11 episodes of the Essential Finance channel. It's my new channel. And I highly recommend you just sit there and binge watch it, and it will change you. And then subscribe to the channel, of course, and make sure you watch those videos every single day. I've got that machine built very nicely. It took me a lot of my time to build that machine with video editors and thumbnail guys and title guys, and it takes a lot of time. I've built that. I've been neglecting this channel a little bit, which I apologize for. But I will be back here more. And in fact, this week, we've got 2 awesome interviews lined up. We have Juan, which you guys absolutely love. And of course, we have, why is my mind jumping out? We'll call it a special guest, having a senior moment here. Joe Biden at his best. I can't remember who my guest is later in this week, but you'll definitely want to do it. So make sure you subscribe to this channel if you haven't done that yet, because those videos are coming up, and I know you guys love those 2 analysts, and they're going to tell us about what's happening, and we're going to find out the big question, especially from Juan. I know you're all waiting. Is the bottom in? Is it time to jump back into the markets? We'll find out what Juan has to say about that later on this week. Okay, so go ahead and subscribe to this channel and check that link in the description. It'll also be in the pinned comment, and watch those essential investing episodes. Consider it a challenge from me to you, because I think it's going to drastically change the way you see the world. Okay, guys, let me know in the comments below if you're enjoying this video. Take care. I'll see you soon.